Alex, thank you. Well, joining us from the CME Chicago is Larry Levin, the president of Trading Advantage. And Larry, look, it seems as if the markets now must pay attention more and more to economic data to see where the Fed is going to move.
Yeah, we got a whole bunch of it in about 25, 30 minutes. In fact, Alex said, the markets are looking for direction. I think they're going to get that direction. There's certainly going to be a knee-jerk reaction, Betty, and it's really what that knee-jerk reaction ends up doing to the markets. Sitting right at 1350 in the S&Ps, right? Obviously, that's a big psychological level. I actually think we'll trade on both sides of it right after that economic data. We just got to see where we end up. But if we stay above that 1350 level and rally from there, I think traders will kind of jump onto that situation, want to be long these markets. We're coming into the end of the quarter. There'll be that window dressing at the end of the month that everybody's talking about, and we're not far away from that right now.
Larry, it's been a day now since the Fed came out with their decision. A lot of people disappointed there wasn't more. What's the React trading floor right now?
Yeah, I mean, most traders believe that there is more to come, right? If the twist, which they said is going to stay in place for a long time, doesn't work and the markets keep dropping, the Fed will step in with more. They've shown no hesitation to do that previous, and you can't find a trader down here who doesn't believe that that's going to happen if these markets break down or drop again.
Larry, this is Alex. How much of the support that we're seeing in the S&P right now do you think is due to short covering?
There's some of it, right? But the markets are really kind of sitting on the higher end of the levels we've been. We've been as high, as 1420 in the S&Ps. Pardon me, but the markets have already been all the way down to 1250. So we're kind of sitting, Alex, right in the middle of those two levels. So people certainly have been short from the top, but we haven't spent much time in the levels we are. So I don't think there's a ton of short covering. I actually think it's really the opposite. A decent amount of people see these markets drop. They want to be long these markets for the reasons we're talking about. The twist, more government intervention, and the more of that we get, the more these markets will want to go higher as traders. It's kind of a self-fulfilling prophecy, right? More belief in that happening gets people long, and then when it does happen, it makes them right and makes more people step into the market.
Larry, let's talk sectors really quick here, because is there any end in sight to the slide in oil prices right now and those oil stocks in the back of that?
Yeah, I think they'll find some support, right? I mean, everybody's the sky is almost falling in oil, right? And it's summertime, but it's not really the middle of summer. I would really expect that the oil will find some support. Maybe it's around $75, $70, and then you'll see the whole industry as a whole. The oil, as the futures contract, and then the stocks, the equities that trade around with it. I think they'll all start to move higher as we get deeper into the summer. That's really kind of a seasonal trade, and it's something that happens fairly often around here.
Larry, quickly, I mean, we know that jobs data will be very sensitive for the markets, but what about housing data, which is just coming up in a few moments?
Yeah, I think that's certainly going to be a sensitive thing, although we haven't seen really good data on that, as a whole, Betty. And so I don't think that's going to change anytime soon. There's certainly a lot of inventory out there, and until that changes, you're not going to see great housing data, and the market's not going to react well to poor data. It may not fall off as it's expected, but it's certainly not going to rally these markets, I don't believe.
Larry, thank you. Larry Levin of Trading Advantage at the CME.